How to Qualify for a Loan in Jamaica, published on September 10th, 2024. How to qualify for a loan in Jamaica, a simple guide. Applying for a loan in Jamaica can be a little tricky, especially if you've never done it before. But with the right information, anyone can understand what it takes to get approved for a loan, whether you're borrowing money to buy a house, a car, or just need some extra cash. In this guide, we'll explain everything you need to know about qualifying for a loan in Jamaica, using simple language and real-life examples. Let's start by breaking down the main parts of the loan process and what banks or credit unions look for when deciding whether to give you a loan. What is a loan? A loan is when you borrow money from a bank, credit union, or other lender and agree to pay it back over time, usually with some extra money added called interest. Interest is like a fee for borrowing the money. When you get a loan, you're promising to repay the amount you borrowed plus interest by a certain time. There are many types of loans you can get in Jamaica, such as personal loans, for things like home repairs, school fees, or medical bills. Mortgage loans, to buy a house. Auto loans, to buy a car. Business loans, to start or grow a business. Step 1. Understanding what lenders look for. When you apply for a loan, the bank or credit union will check a few things to make sure you can pay them back. These things are income. They want to see that you have a steady income. This means you earn money regularly, either from a job or from your own business. They'll ask for proof, like pay slips for workers or financial records for business owners. Credit history. Banks look at how well you've managed money before. If you've borrowed money in the past, they'll check if you paid it back on time. In Jamaica, this is called your credit history. If you've missed payments before, it might make it harder to get a new loan. Debt-to-income ratio. This is a fancy way of saying how much money you owe compared to how much you make. If you already have a lot of loans or debts, the bank might worry that you won't be able to pay them back. They usually prefer that your debt doesn't take up more than 40% of your income. Collateral. For bigger loans, like a mortgage, the bank might ask for something of value, like your house or car, that they can take if you don't pay back the loan. This is called collateral. Not all loans need collateral, though. Step 2. Gather the documents you'll need. When you apply for a loan, the bank or credit union will ask you for several important documents. This helps them confirm who you are and that you can afford the loan. Here's what you'll need. Identification. You'll need a government-issued ID like your passport, driver's license, or voter's ID. This proves your identity. Proof of address. You'll need to show that you live where you say you do. This could be a recent utility bill, like electricity or water, with your name on it, or a bank statement. Tax registration number, TRN. In Jamaica, your TRN is a number the government gives you to track your taxes. You need this number to apply for any loan. Proof of income. If you're employed, you'll need recent pay slips, usually from the last 3 months. Or a letter from your employer that says how much you earn. If you're self-employed, meaning you own your own business, you'll need financial documents, like your tax returns or bank statements, to show how much money your business makes. Bank statements. You might be asked to provide bank statements from the last 6 to 12 months to show your financial activity. This helps the bank see how you manage your money. Step 3. Understand your loan options. There are different types of loans for different needs. The type of loan you choose depends on what you need the money for and how much you want to borrow. Personal loans. These are usually for smaller amounts and are used for personal reasons, like paying for school, medical bills, or fixing up your home. Personal loans don't always need collateral, but you'll need a good credit history and proof of income. Mortgage loans. If you want to buy a house, you'll likely need a mortgage loan. Mortgages are large loans that you pay back over a long period, sometimes 20 or 30 years. To qualify for a mortgage, you'll need a good credit score, a steady job or business income, and money saved up for a down payment, usually 5 to 10% of the house price. Auto loans. Auto loans are for buying a car. Like mortgages, auto loans often need a down payment. The car itself is usually the collateral for the loan. meaning if you can't repay the loan, the bank can take your car. Wordle business. Business loans help you start or grow a business. The bank will want to see a business plan and financial records to make sure your business can make enough money to pay back the loan. Step 4. Get pre-approved. One of the smartest things you can do before applying for a big loan, like a mortgage or auto loan, is to get pre-approved. This means the bank checks your documents and tells you how much money they might lend you before you start shopping. It saves you time and helps you know what you can afford. Step 5. Improve your chances of getting a loan. If you're worried about getting approved for a loan, here are some tips to improve your chances. Build your credit history. Your credit history is a record of how you've handled money in the past. In Jamaica, you can build your credit by using credit cards responsibly or taking out small loans and paying them back on time. The better your credit, the easier it will be to get a loan. Pay off other debts. If you already have loans or credit card debt, try to pay off as much as you can before applying for a new loan. Banks want to see that you're not taking on more debt than you can handle. Save for a bigger down payment. For big loans like mortgages or car loans, the more money you can put down up front, the better. Saving for a down payment shows the bank that you're serious about the loan and reduces their risk. Show consistent income. Lenders want to see that you have a stable job or business. If you switch jobs a lot or your income changes from month to month, it might make it harder to get approved. Try to show at least 2 years of steady income. What is interest and how does it work? Whenever you borrow money, you'll have to pay back more than you borrowed. That extra money is called interest. Interest is a percentage of the loan amount that the bank charges you for lending you the money. For example, if you borrow JMD 100,000 with an interest rate of 10%, you'll end up paying back JMD 110,000 over time. The interest rate is how much the bank charges you for borrowing money, and it's usually based on a percentage of the loan. Lower interest rates mean you'll pay less in total, while higher interest rates mean you'll pay more. Banks offer 2 types of interest rates. Fixed interest rate. This means the interest rate stays the same throughout the life of the loan. It makes it easier to plan your payments because they won't change. Variable interest rate. This means the interest rate can go up or down over time. Your payments might change depending on how the interest rate changes. Variable rates can be risky because your payments could go up unexpectedly. Step 6. Know about fees and extra costs. When you take out a loan, there are sometimes extra costs that come with it. Here are some common ones. Processing fees. Some banks charge a fee to process your loan application. This could be a flat fee or a percentage of the loan amount. Insurance. For big loans like mortgages or car loans, the bank might require you to get insurance. For a mortgage, you'll need mortgage insurance, and for a car loan, you'll need car insurance. This protects the bank if something happens to your house or car. Late fees. If you don't make your loan payments on time, the bank might charge you a late fee. Try to pay on time to avoid these extra charges. Step 7. What happens after you apply? Once you've submitted your loan application and all the required documents, the bank will review everything. This is called the underwriting process. They'll check your credit history, income, debts, and other factors to decide if they'll give you the loan. Approval. If you meet all the requirements, the bank will approve your loan and give you the money. For big loans like mortgages, this could take a few weeks, but for smaller loans, you might get approved in a day or 2. Denial. If you don't meet the requirements, the bank might deny your loan. If this happens, don't worry, you can try again later. Take some time to improve your credit or save more money before reapplying. Table outlining the key stages of getting a loan in Jamaica. Here's a simple and comprehensive table outlining the key stages of getting a loan in Jamaica. It covers what to expect at each stage, why it's important, and what documents or actions are needed. Stage what? Why documents needed. How to advice. 1. Assess your needs. Determine how much money you need and why. This helps to avoid borrowing too much or too little. Think about what you need the loan for and the amount. 2. Check your eligibility. Understand the requirements for getting a loan to ensure you meet the basic requirements before applying. Proof of income, employment details. Review different lenders' requirements. Be realistic. Save for a down payment. Save a portion of the loan amount, for example, 5 to 10%. Most loans require you to put down a percentage. Bank statements showing savings. Start saving early. Open a separate savings account. 4. Improve your credit. Pay off any outstanding debt and build credit. A good credit score improves your chances of approval. Credit report. Pay bills on time. Avoid taking on more debt. 5. Gather documents. Collect required documents, ID, proof of income. You'll need these for the loan application process. Valid ID, proof of address, payslips, bank statements. Gather documents early to avoid delays. 6. Pre-approval. Apply for pre-approval with your lender to know how much you can borrow and if you qualify. Job letter, TRN, proof of income, credit report. Submit complete documents for faster processing. Research lenders. Compare lenders based on interest rates and terms. Different lenders offer different rates and loan conditions. None. Use online tools or visit banks to compare options. 8. Apply for loan. Submit a formal application to the lender. This is the official step to securing your loan. Completed loan application, all required documents. Ensure all documents are correct and up to date. Underwriting. The lender reviews your application and risk. To assess whether you qualify for the loan. Financial history, credit score, employment details. Be prepared for questions or requests for more information. 10. Approval. Receive approval and a loan offer from the lender. If approved, you'll receive the loan amount and repayment terms. Approval letter. Review the terms carefully before accepting. Signing agreement. Sign the loan agreement. This legally binds you to the loan terms. Loan agreement. Read the contract. Ask questions if unsure. 12. Disbursement. Loan funds are transferred to your account. The lender transfers the money to you or directly to a vendor. Bank details or vendor account information. Make sure to know where the funds are going. Repayment. Start paying back the loan according to terms. You'll need to start monthly repayments immediately. Repayment schedule. Set up automatic payments to avoid late fees. 14. Completion. Loan is fully paid off by the end of the term. Once fully repaid, the loan is closed. Proof of final payment. Keep all payment records and confirmations. Final thoughts. Getting a loan in Jamaica doesn't have to be scary or confusing. By understanding what lenders are looking for, gathering the right documents, and being smart about your financial choices, you can increase your chances of getting approved. Remember, always ask questions if you don't understand something. Banks and credit unions are there to help, and understanding the loan process is the first step toward reaching your financial goals. This guide covers the basics in a way that's clear and easy to follow, ensuring that both adults and younger readers can grasp the concepts without feeling overwhelmed or confused. If you'd like to expand further on any of the steps, just let us know. Disclaimer: this information is provided for general guidance purposes only and is not intended as financial or legal advice. Always consult with a licensed financial advisor or loan officer for advice specific to your situation before making any financial decisions.